Mic check. All right. Hey, everybody. Welcome to Markets for Millennials. This is a live stream on Thursday, August 19th. And just looking around at things, I didn't make any videos earlier this week. And I thought I'd hop on today because the schedule allows it. So the equity markets closed about 35 minutes ago. And we have... let's see. I should say the futures closed, man, what am I saying? Got to take a breath. The futures markets just reopened for the next trading day about 35 minutes ago. So that means about 2 hours and 35 minutes ago we closed the New York session. And there's just, some really interesting things. If I go to like a 30-minute chart, it was really interesting. That we kind of started the day up and then came down and then kind of finished the day up. So that's kind of, I guess, not unexpected. I think what a lot of people were looking at on the NASDAQ, for example, I think a lot of people were looking at this breakdown from this ascending wedge, which for me, the wedge is kind of like a smaller pattern taking place within this channel. And I've been saying in previous videos that I suspected that we would break down out of this channel, and I just had this feeling, and that I actually was looking for us, if we did break the channel, that we would come down either at least to this horizontal support, which is just above 14,000, and it just so happens that now we've got the ascending trend line from the bottom of the channel coming up as well. And so if we dropped, we're not going to drop straight down. If we did, that's another minus 6% down. From our little interim top, that would be about 7.3%. Nothing too crazy. A typical correction is usually 9%, between 9 and like 20-ish%. And then obviously on equities, a bear market is anything more than 20%. So this is not at all surprising. If you go back and look at previous videos of mine, you'll see that I definitely was talking about this being a possibility of a breakdown and then a retest. And if you wanted to, like, if I get rid of this, I'll delete that and I'll go off of let's see, I'll make the line here. So if you look at it this way, this red candle from the 16th, from the 17th, is the actual closing breakdown. I've seen other people's charts that look something like that, which that's fine. In this case, to me, it's really important. This is why TA is a lot of an art, and I think it's important to recognize like biases. A lot of people go from this closing wick as well, and they'll connect the green wicks. And the reason why that's important is because however you do it, the importance of it is different people will interpret these things differently. If this is your line, if this is where you put the line, then what you've already seen is a breakdown. This August 11th daily candle would be a breakdown, and then these 3 days, the 12th, 13th, and 16th, are your retest, and then this is a resumption down. So anybody looking at this, if this is their trend line for this wedge, and this is assuming people are looking at that. I don't know if people are, but if they are, then this is like, confirmation of the downtrend. Now let me get rid of this line again. All right, if we just treat this like it's a channel, all right, what are we seeing here? And I swear, if somebody tells me that we're looking at a Wyckoff, like I'm tired. I'm so tired of people talking about Wyckoff. When I look at this, like a lot of people, they get so concerned about each little daily wick. Look at like how many times you had a lower or a higher wick and then it still sold down, like either the next day, like you made a lower wick low or whatever. Like, it's just so hard. So for me, I look at these things as like waves. And so if I turn this the magnet off, so I see like a wave and kind of a wave and then a wave and then a wave and then a wave. So depending on how you look at it, you interpret this differently. So just like I showed you how, if this is your line, right? If you're looking at something like this, then you've broken down and you've gotten a retest and you're resuming down. So there are people who see this resumption down, like this August 17th, which closed down, like it not only wicked down below, but it also closed down below, all of these bodies. So it's like, that's a resumption down. So a lot of people look at this like, oh, I'm shorting, right? And they would be wise to do so if this is actually what the market is respecting. So a couple things, I wanted to finish this thought before I move on. But if you are looking at a different line, like if you're dropping the line here, see, so like I've got this closing wick, this closing wick, this closing wick. If your line is here, respecting those lines, right, it still works. Like even look, this green wick is there's a touch there. We're kind of cutting the difference between these wicks right here. And so if you follow this up and this is your line, this changes things because you haven't gotten a retest yet. And then the question is, so it's why the lines, like getting the lines right, it's an art, and why it's so important, because if this is your line, you haven't gotten a retest, so then you have to decide, okay, is this green candle right here a successful retest? Or does it have to come all the way up for you to get that retest and resumption down, right? Do we have to test this line as support or not? And so I think it's really interesting to think about. I don't know, my personal view, I didn't take this trade. I was expecting it. But to me, like, I don't want to short the market because with the Fed doing what it's doing, I know that they're talking about tapering. I think that's why we're getting this little scare. To me, I actually would say I think the market it's going to call the Fed's hand. That's my opinion. I don't know. But the way I see this is, like, I was expecting a pullback, but I'm not going to short because I just feel way too strongly that anytime there's any significant move down in equities, like over the past, year and a half since the COVID crash, that they're just going to step in, they may not like verbally, or they may not like actually do anything policy wise, but they definitely will verbally, intervene. And we're at this point now, where it's crazy how Powell can go up and people are hanging on every word that he says. So I don't know, like, to me, for this to really confirm itself, like, I'm expecting this sell down. The place where I would actually start shorting the NASDAQ is if we break the bottom of this channel, okay, and then also get below horizontal resistance at 14,000 and then retest and resume down. That's where I would actually look to short, because then you're looking at, this space or maybe potentially this space to be the next, fairly significant support. And so to me, that's a lot better, because as long as, like, I have this rule about my trend lines that as so I've got this trend line coming up. So as long as price is above here, I'm not shorting. Right? The reason I drew this wedge in is because I wanted to be aware that price was eventually going to probably correct down to here. And it still may not correct to the bottom of this line, right? To the bottom of this channel. But until it does and then retests that and resumes down, like, this is still a bull trend. It's still going up. And so that's where, like, you got to have the awareness, like, oh, I broke one, trend line, I'm going to short now. Right? I'm not saying you can't if you're an expert, but, like, I don't think the average person should do that. So I don't know. That's just my view. So I'm going to be looking to see like if price does come down here, and if it does, will it break, retest, and resume down, or will it not? So that's kind of my rule. Like as long as I have the kind of the lowest like prime trend line intact and hasn't been broken, I'm not doing anything. You know, I'm not going to touch it. Only to buy off of support. And speaking of support, like a lot of people like to look at the moving averages, right? Look at the, let me get rid of this. Look at this touch. Oh, I got some marks all over the place. Look at the touch on the 50-day moving average. This is, by the way, the normal, like simple moving average. It's not the EMA. I don't really like the EMA. But you could see like we made that touch. And like look at all the places where, I mean, we did break through the EMA a couple of times. I'm sorry, the 50 MA. But, you know, a lot of times we would like get close to it and then kind of bounce off. Not all the time, but a lot of times. So this to me, like, again, I'm not going to short at this spot where, like, this is just me. I'm not going to short at a spot where you've got this moving average that price is moving into. And I'm not even saying that I typically use moving averages, but when I'm trying to think of what I'm going to, like, what actions I'm going to take, like, trading-wise, like, it's got to be crystal clear. And I got to know for sure. Like, I got to be convinced without any sort of doubt. And to me, like, this is just a piece of data that's like, okay, it just creates some doubt in my mind. So I'm not going to do it. You know, if we get down here and we successfully hold this this ascending trend line or the horizontal resist or support, I'm going to, you know, I wouldn't see why you wouldn't buy the Qs or take a long on futures. It's just my opinion, though. And then another thing to look at is as you're watching price come over, like to me, I think local support wise, like it's nothing until we get down here. And it's light, so we could just barrel right through that if we were going to go to the downside. But to me, it's like I got no like hopes about this going down all the way. I think it could, but I got no hopes about it going all the way down until we break this, you know, this swing low from right here. So that's one thing. I tweeted about this. That's my Bitcoin tweet. Where did I do this? I tweeted this earlier. I was like, oh, look at where the S&P found support. Yeah, you could see my ascending trend line, right? So like that was that 6 hours ago, something like that. So here it is in real time. Like here's my ascending trend line from the S&P. It still looks like we are sort of like, you know, we're starting to get more and more constricted into a smaller area. So to me, like the idea that this could be like a really, really long wedge where we could actually see a pretty significant correction, you know, not too far-fetched. And I think because it's so heavily weighted to the tech names, you know, what I talked about on the NASDAQ, if it falls, I think the S&P is going to, S&P is going to go with it. We had a couple days of selling. We bounced off that support. And if you actually look, we almost touched the 50-day moving average today. So once again, like people are like, oh, it's time to short. They're not like, if you think that now is the time to short the S&P, then, you know, if you're looking for the crash, stop looking for the crash because it's not crashing yet, you know, and I'm not even saying that it will. Where would a correction go? Again, you got to get like at least 9%, maybe 10, right? So a correction is going to take you to this, basically this support line right here, which is just over 4,000. That would be a pretty hefty move if we were to make that correction. But honestly, like, you know, I don't see why not. Like, if this is a wedge, again, if it's a wedge and we break down, I don't see why we couldn't go down there. But I'm not saying we will, because I feel like there's, you know, there's decent support here and probably even here before we come down to that spot. So, yeah, so that's, I don't know, that's something to look at. I've been saying it for a while, like, I'm not buying, I'm not taking longs. I'm going to wait to take longs until we actually get a correction, but I don't feel like I'm missing out. You know, I would rather wait for like the good entry and maybe this is the good entry. I mean, it's shown to be the good entry, since October of 2020, right? So maybe this is the good entry, or maybe it is a decent entry. But the further this thing goes without like at least a 9 to 10% correction, the less likely I am to take the trade to the long side. And maybe that means I'm going to wait a long time. But as it crawls up, I mean, so we had the crash, and ever since the bottom, to the top, we've gone 106%, right? A move of, $2,300 for the S&P. But then if you think about it, a 10% correction or a 9% correction, look at what you're losing. You're losing $400. And this kind of stuff happens really quickly. I don't know. Percentages, they seem different depending on which direction, if you're going long or short. But as far as I'm concerned, I'm waiting for the bigger correction before I take a long, and that's just my own rules. I'm not going to take a long unless I feel like, we've got really well established support underneath, and that the risk is more to the upside, more to the upside than to the downside. And I just am not convinced here. What's really interesting is if you look at the 200-day moving average, it's creeping up to that spot where you would get into 10% correction range. So that's there you go. So again, I'm holding sway on the S&P, and then the Dow. I thought, I wasn't sure. We were above this overhead resistance, and then we just fell back into it. But also look at where we are finding support, magical lines being magical. So, and let's look at the 50 here, and we've also touched the 50 here, right? So it's again bits of data that we look at to see, you want to be stacking edges in your favor. You want to be stacking, indicators, I guess, if you want to say it that way, in your favor. And so for me, I typically am going to err on the side of caution if I'm uncertain. And there's no need to have FOMO. The Russell, though, good night. I tweeted about this also, I think right here. The Russell, I've been talking about this for months. To me, the Russell is a better picture of the overall economy because it's 2,000, kind of small cap companies, which is more in line with the actual economy than the S&P, because the S&P is large companies for the most part. And we're getting to a point where we're about to touch to me, what seems to be the most critical support level. And maybe some would say it's around the 2024 level. But to me, this level right here, we're getting down to it. This sideways channel we established in, on the 7th of January and around that time, and we've been sideways whilst all of the other equity markets are up since then. And so to me, that's when the overall economy, what is reflected in the Russell, is not confirming what you're seeing in the equity markets, even in a time when everything is super asset inflationary. That to me, that's a concern. Now look at how many red days we've had in a row. 1, 2, 3, 4, 5, 6. 6 days in a row. It can happen fast. They say that the markets take the stairs up and the elevator down. So we could get a pretty sharp drop soon. What would a correction be from the high? We haven't made a high since March 15th. We are at 10% down on the Russell, right? If we break through, my support at 2087, that's going to be almost 12%. And if we go down to 2024, that's going to be almost 15%. Okay, so that's pretty good. So we'll see over the next week what's going to happen. I've been looking at those things. I've also been looking at Bitcoin. What did I post about Bitcoin? I feel like I posted something recently. Oh yeah. So a lot of people are freaking out. I tweeted this. I thought this would be kind of funny. I deleted a lot of the lines, or I hid a lot of the lines. But if you look at this and you're confused by this, Like, welcome to the club. This is probably the biggest problem with, when you pay attention to every wick. It's so important to have a system where you remove the noise. That's why PSA, all you people trying to trade Bitcoin on the 1 hour time frame, good luck. Okay? Where are you going to put the support? I got people who are what are we looking at? I got people who are drawing lines right here, and they're price breaks down here, and they're oh, there it goes, but then it just comes right back up the next hour. You gotta raise the time preference. I guess each to his or her own, but to me, this is this was super complicated. I'm looking at this, I'm okay, well, what's pertinent? I'm getting touches here, 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 and we've got people who are freaking out because we had a couple of days or a couple of 8-hour sessions where we sold down, a couple of 4 red days in a row. We had a doji green day where we had come up really hard and then we sold down and basically closed near break even. So people are gloomy, throwing in the towel, talking about how Bitcoin's going to come back down under 40,000. It's going to go back down to 30,000. And what I've been saying, the reason why this blue line is so thick, what I'm looking at really is the blue line. And the reason why is because out of all the other noise that I could have on my chart, a lot of people are they're drawing this line, and that's good, great, look at, you see the touches, so it's support, so maybe we'll keep that. It's not what I'm using different lines for various reasons, but not really important to discuss. I'm using lines that are symmetrical, but with other things that have happened in the markets on Bitcoin. But if if that's what you do with your lines, good, well, here we are, we're kind of stuck again. We need to get above this this line. So to the upside, what you're looking for, this is how easy it can be. You got to get over, retest, and go up, or maybe just blast through. Something like that's got to happen to the upside. To the downside, though, people keep freaking out because we have a couple of red days in a row, and
Hi. Do you mind if I come in?
sure.